Today, we are taking a closer look at an important development in the global foreign exchange market that, while centered on the Vietnamese Dong and the US dollar, also provides valuable insight into the broader international currency environment that Iraqi Dinar followers should pay close attention to. Understanding movements in the US dollar, central bank policy, and global investor sentiment is essential because these factors influence not only major currencies but also emerging market economies, including Iraq. The latest market update shows that the US dollar strengthened against the Vietnamese Dong during Wednesday morning trading. Vietcombank raised its selling price for the US dollar to 26,530 Vietnamese Dong, representing a slight increase from the previous trading session. Meanwhile, activity in Vietnam's unofficial market moved in the opposite direction, with the dollar easing slightly to around 26,380 Dong. At the same time, the State Bank of Vietnam maintained its official reference exchange rate at a record high of 25,293 Dong per US dollar. These developments occurred as global investors closely monitored the Federal Reserve's upcoming interest rate announcement, while renewed geopolitical tensions in the Middle East encouraged investors to seek the relative safety of the US dollar. Although this news primarily concerns Vietnam, there are several important lessons that Iraqi Dinar followers can draw from these developments. The first is that the value of the US dollar remains one of the most influential factors in the global financial system. When uncertainty increases because of geopolitical events or expectations surrounding monetary policy, investors often move capital into US dollar assets. This behavior strengthens the dollar against many currencies around the world. For countries like Iraq, whose economy remains closely connected to oil exports priced in US dollars, movements in the strength of the dollar can have meaningful economic consequences. A stronger US dollar can influence trade balances, foreign reserves, import costs, inflation trends, and central bank policy decisions. Therefore, even when the headline news appears unrelated to Iraq, the underlying economic forces deserve careful analysis. One of the key reasons behind the dollar's strength is investor anticipation of the Federal Reserve's policy announcement. Market participants widely expect that the Federal Reserve will leave interest rates unchanged. However, analysts believe that the central bank's forward guidance could prove even more significant than the actual interest rate decision itself. According to market strategist Sim Mo Seong of OCBC, the Federal Reserve appears to be adopting a more hawkish stance. In financial markets, a hawkish central bank generally indicates a stronger commitment to controlling inflation, even if that requires interest rates to remain elevated for a longer period. Investors carefully evaluate every word from Federal Reserve officials because those signals influence expectations regarding future monetary policy. If the Federal Reserve communicates that inflation risks remain elevated and that interest rates may stay higher for longer, financial markets could continue supporting a stronger US dollar. Conversely, if policymakers indicate that inflation pressures are easing and future rate reductions become more likely, the dollar could weaken over time. This balance between inflation control and economic growth remains one of the most important drivers of global currency markets. This matters because the US dollar serves as the world's primary reserve currency. Most international commodities, including crude oil, are priced in dollars. Many emerging market economies also hold significant portions of their foreign exchange reserves in US dollars. Consequently, changes in Federal Reserve policy often ripple across financial systems far beyond the United States. Turning our attention to Vietnam, the State Bank of Vietnam's decision to maintain its reference exchange rate at a record high demonstrates how central banks manage exchange rate stability during periods of global uncertainty. Rather than allowing abrupt currency fluctuations, many central banks prefer gradual adjustments that preserve investor confidence while protecting domestic economic stability. This strategy has similarities to Iraq's approach. The Central Bank of Iraq also manages the value of the Iraqi dinar through a controlled exchange rate framework, rather than allowing unrestricted market fluctuations. Such systems provide greater stability for domestic businesses, government budgeting, and international trade. While every country's economic structure differs, the principle of maintaining confidence through predictable monetary policy remains important. The slight increase in Vietcombank's official selling rate and the relatively stable reference rate suggests that Vietnam continues managing currency movements carefully, rather than permitting excessive volatility. This measured approach reflects the importance of maintaining credibility in financial markets. At the same time, the difference between official exchange rates and black market trading remains another noteworthy aspect of this report. The unofficial market experienced a modest decline, while official banking rates remained relatively stable. Differences between official and parallel market rates often reveal changing supply and demand conditions within an economy. Iraq has faced similar challenges over recent years, particularly regarding the relationship between official exchange rates and parallel market activity. Iraqi authorities have implemented numerous banking reforms designed to narrow those gaps by improving compliance with international financial standards, strengthening anti-money laundering measures, and enhancing transparencies in foreign currency transactions. Whenever a country successfully reduces differences between official and unofficial exchange rates, it generally improves confidence in its financial system. Investors often interpret such progress as evidence of improving institutional strength and more effective monetary policy implementation. Another important feature of today's global market update involves renewed geopolitical tensions in the Middle East. Financial markets frequently respond to geopolitical uncertainty by increasing demand for traditional safe haven assets, including the US dollar and US Treasury securities. This relationship creates an interesting dynamic for Iraq. On one hand, geopolitical uncertainty can strengthen the dollar globally. On the other hand, instability within energy-producing regions can influence oil prices. Since Iraq relies heavily on oil exports for government revenue, higher oil prices may strengthen fiscal conditions even while a stronger US dollar affects international financial markets. This illustrates why analyzing Iraq's economic outlook requires considering multiple variables simultaneously, rather than focusing exclusively on exchange rates. Oil revenue, fiscal policy, banking reform, inflation, foreign investment, infrastructure development, and monetary policy all interact to shape the country's long-term economic trajectory. Looking beyond Vietnam, the Reuters report also highlighted broad weakness among several major currencies. The euro remained near a one-month low against the dollar despite a slight recovery during trading. The Australian dollar declined noticeably, while the British pound continued trading near its weakest level in several weeks. The New Zealand dollar also weakened modestly. When several major currencies weaken simultaneously against the US dollar, it usually reflects broad-based dollar strength rather than isolated weakness in individual economies. Investors may be adjusting portfolios in anticipation of higher US interest rates, stronger economic data, or elevated global uncertainty. For Iraqi Dinar observers, this broader context is important because it demonstrates that today's currency movements are part of a larger international trend, rather than evidence of country-specific developments. Currency values constantly adjust according to global capital flows, central bank expectations, inflation forecasts, economic growth prospects, and geopolitical developments. It is also worth noting that currency markets often react more strongly to expectations than to actual policy decisions. Investors spend weeks analyzing economic indicators before central bank meetings. By the time an announcement occurs, much of the expected outcome may already be reflected in exchange rates. Instead, markets frequently respond to subtle changes in policy language or future guidance. That is precisely why analysts emphasize the importance of the Federal Reserve's messaging, rather than simply whether interest rates remain unchanged. Even small differences in wording regarding inflation risks, employment conditions, or future policy direction can trigger significant movements across global financial markets. For Iraq, monitoring these developments remains valuable because global financial conditions influence investment decisions, capital availability, borrowing costs, and international trade relationships. Although Iraq's exchange rate operates under a managed framework, external financial conditions still affect the broader economic environment. Another important point involves investor psychology. Financial markets constantly evaluate risk. During periods of heightened uncertainty, investors generally prefer assets perceived as safer or more liquid. The US dollar has historically benefited from this behavior because of its dominant role in global trade and finance. This does not necessarily indicate weakness in every emerging economy. Instead, It reflects temporary shifts in portfolio allocation driven by changing perceptions of risk. As geopolitical tensions ease or monetary policy expectations evolve, capital flows can reverse accordingly. For Iraqi policymakers, maintaining confidence in the domestic financial system remains a long-term priority regardless of short-term fluctuations in international markets. Banking sector reforms, digital payment expansion, stronger regulatory oversight, and improved financial transparency all contribute to creating a more resilient economic environment. Over recent years, Iraq has undertaken multiple initiatives aimed at modernizing its banking infrastructure, strengthening compliance with international financial standards, and encouraging greater participation within the formal financial system. These reforms are intended to support long-term financial stability rather than generate immediate changes in exchange rate policy. It is important for Iraqi dinar followers to distinguish between structural economic reforms and short-term market speculation. Sustainable improvements in any national currency typically depend upon stronger economic fundamentals rather than isolated market events. Stable government finances, diversified economic growth, credible institutions, effective monetary policy, and investor confidence collectively determine long-term currency performance. Today's developments therefore serve as another reminder that currency markets function within a complex international framework. Vietnam's exchange rate, the Federal Reserve's policy outlook, Middle East geopolitical developments, and broader investor sentiment are interconnected through global capital markets. Looking ahead over the short term, attention will remain focused on the Federal Reserve's communication. If policymakers reinforce expectations that interest rates could remain elevated for an extended period, the US dollar may continue receiving support. Emerging market currencies could experience additional pressure, particularly if investors continue seeking dollar-denominated assets. However, if future inflation data moderate more quickly than expected or economic growth slows, market expectations regarding future Federal Reserve policy could change. Such adjustments might eventually reduce upward pressure on the US dollar. These outcomes depend upon incoming economic data, rather than predetermined assumptions. For Iraq specifically, the immediate implications are likely to be indirect rather than dramatic. Iraq's managed exchange rate framework provides a degree of insulation from daily fluctuations seen in freely floating currencies. Nevertheless, policymakers continue monitoring international financial conditions, because external developments influence trade, investment, foreign reserves, and economic planning. Longer term, Iraq's economic prospects will continue depending primarily upon domestic reform efforts, fiscal discipline, infrastructure investment, private sector development, banking modernization, and responsible management of oil revenues. International developments such as Federal Reserve policy certainly matter, but they represent only one component of a much broader economic picture. Another valuable lesson from today's report concerns the importance of central bank credibility. Whether examining the Federal Reserve, the State Bank of Vietnam, or the Central Bank of Iraq, market participants closely observe how policymakers communicate their objectives. Consistency, transparency, and credibility help reduce uncertainty while strengthening confidence among businesses, investors, and consumers. When markets trust that a central bank will pursue price stability and sound monetary management, exchange rate volatility often becomes more manageable. This principle applies across developed and emerging economies alike. Today's report also reinforces the significance of diversification within national economies. Countries heavily dependent upon a single export sector may experience greater vulnerability to external shocks. Iraq continues pursuing initiatives intended to expand investment beyond oil, encourage private sector activity, and strengthen non-oil industries. Progress in these areas could enhance long-term economic resilience, reducing exposure to fluctuations in global commodity prices. Financial markets will undoubtedly continue responding to new economic data, inflation reports, employment statistics, central bank communications, and geopolitical events. Rather than reacting emotionally to every headline, successful economic analysis requires examining broader trends, comparing multiple indicators, and understanding the underlying drivers behind market movements. For Iraqi dinar followers, maintaining this balanced perspective remains particularly important. Short-term fluctuations in global currency markets rarely determine the long-term outlook for any individual economy. Instead, sustained progress depends upon comprehensive reforms, prudent fiscal management, institutional development, and continued economic diversification. As always, it is essential to separate confirmed economic information from speculation. Today's market update provides valuable insight into current global financial conditions, but it should not be interpreted as evidence of immediate changes to Iraq's monetary policy or exchange rate framework. Responsible analysis requires evaluating verified information within its proper economic context. In conclusion, the strengthening of the US dollar against the Vietnamese Dong and several major global currencies reflects a combination of Federal Reserve expectations, renewed geopolitical uncertainty, and continued investor demand for safe haven assets. Vietnam's central bank has maintained exchange rate stability through its managed framework, while international markets await clearer signals regarding future U.S. monetary policy. For Iraqi Dinar followers, these developments highlight the importance of monitoring global financial conditions alongside Iraq's domestic economic reforms. Although the immediate effects on Iraq may be limited, international monetary trends remain an important part of understanding the broader environment in which Iraq's economy operates. Thank you for watching today's analysis. If you appreciate responsible, balanced, and factual coverage of the Iraqi dinar and Iraq's economy, please subscribe to the channel and enable notifications so you never miss our latest updates. We remain committed to providing objective analysis based on verified information rather than speculation. Finally, please remember that this content is provided for informational and educational purposes only and should not be considered financial, investment, or trading advice. Always conduct your own research and consult a qualified financial professional before making any investment decisions.